Or go on page. Well, we finally decided to change the name of this channel. As you know, the name News Archive. The plan was to read various news or business news from various sources and upload those videos to this channel. However, we have decided to do something different. All right, and we will change the name in accordance with what we have decided to do with the channel. Now, what we really want to do with the channel is to do an overview or a portfolio overview of blue collar finance. All right, so blue collar finance, as you know, is the sister channel or the parent channel of this particular channel. And on blue collar finance, what we do is to review companies that are listed on the Jamaica Stock Exchange and to recommend those companies, all right, as a buy, a sell, or a hold. Now, we have a portfolio that we manage for ourselves. So what we want to do is to unveil that portfolio or use this platform to unveil that portfolio and to continue to give you an update of that portfolio. So I will give the channel a name that closely matches what it is that we are planning on doing on this channel. I remember, nothing that is said on this channel is financial advice. I will not expect you to quote here us. That means we're not expecting you to invest in stocks that we have invested in. All right, so we just open up to you as our subscribers to let you know what it is that we are buying and what we are not buying. All right, so enjoy. All right, so as you can see, if you look at cell A, row 1, you can see the beginning balance. We started the portfolio with a $400,000 balance, and that is as of October 2021. That was last year when we just started the channel. All right. Now there are a couple of stocks that we invested in, and if you have watched our videos on blue collar finance, you'd have noticed that we made a number of calls, or there are a number of companies that we valued as being undervalued. All right, so those companies we believe were selling at a discount to their fair value. However, we only invest in companies that we believe fit our risk profile and companies that we believe that we have high conviction. All right, so we only invested in those high conviction companies. All right, so not all companies that are undervalued we will invest in. We have to be highly convinced that those companies fit within our risk profile. All right, so there are a couple of companies that we invested in. All right, so as you can see, Mayberry was one of those companies, and we invested in Mayberry from day one, from last year, October. SOS Stationery and Office Supplies Limited, also one of those companies that we really liked. JMB, now we did quite a number of videos on JMB. All right, so we are really interested in the JMB stock. And the new stocks on the Jamaica, on the junior arm, these new IPO that came out, we entered JFP, even as the entire market or financial space was saying that JFP was a not participate stock or a non-participate stock, meaning you should not purchase it. We are interested in JFP, and we actually included it in our portfolio. Dollar, we also include dollar in our portfolio. All right. Now, as a result, there, based on the way we include these and the way we weigh these different stocks in our portfolio, what we did was to keep a balance of $100,000. This is quarter of the portfolio, which might be too much, All right, and you can, as we go through the presentation, you will see how this extra cash is weighing on the portfolio return. All right, meaning we could get more return out of the portfolio if we had used up all of the cash. All right, but we keep this money on the sideline so as to take advantage of the IPOs that may come during the time of the portfolio. All right. So as you can see, if you look at the date, we started investing in October 2021, and we're giving you an update of the portfolio as of June 17, that is last Friday. All right. Now, as I said, these are our biggest convictions. All right. And that is the reason why we have invested in these stocks. And the thing is, we do not invest in stocks that we have not reviewed. All right, so it doesn't matter how well the stock is doing. It doesn't matter what Twitter is saying about the stock. It doesn't matter what social media is saying about the stock. If we, Blue Collar Finance, have not reviewed the stock, we will not invest in those stocks. All right, so we started reviewing stocks in October 2021, and we started making some purchases in that said period of time. All right. So if you look at Mayberry, our review of Mayberry was in October 2021. The stock was selling at $5.85 at the time. We believe that the stock was undervalued at that time because at that time, the book value of the stock was about some $10. All right. So this stock was selling at deep discount, not only because it is selling below the book value, but because of our analysis and what we believe the stock can achieve in the near future. So we entered Mayberry at $5.85. All right, and we actually put a quarter of our portfolio in Mayberry. So we actually invested $100,000 in Mayberry, and that's a quarter of the $400,000 that we have. All right, so as a result, we got some 17,000 shares. All right, and up to June 17 this year, we still have those 17,000 shares, 17,094 shares. All right, so we still hold all of our Mayberry shares, and Mayberry has returned some 84% as of June 17. All right, so let me just paint that in yellow. All right, so that's the return that we're getting on our Mayberry stock. All right, so we invested some $100,000 in the stock, and now the stock, the value, the total value that we have in this stock is $185,000. All right, so our next big conviction was SOS, Stationery and Office Supply Limited, and you can go to the Blue Collar Finance channel to get our different views on these different stocks that we are talking about. All right, so SOS, another big conviction that we had, we invested some $100,000 in SOS, and at the time SOS was going for $6.04. All right, so we invested some $100,000 in that stock. All right, and again, this is quarter of our portfolio. Now, as of June 2020, the stock is now trading at $12.30. All right, so $100,000 is now $203,000. All right, and that is a 104% increase on this stock. All right, so that one has performed. Our SOS is one of the biggest performer, or the biggest performer in our portfolio. JMMB is another that we really love. And even though this stock has underperformed versus our expectations, we still hold JMMB dearly. All right, because we're really convinced that this stock has a lot of value to add to our portfolio. All right, so in October last year, and we purchased this one from last year, we put a quarter of our portfolio on JMB stock. We get in at some $38.20. And as you can see, that's a $100,000 invested in the portfolio. And remember now, this is pre-fee, so we do not calculate the fees in our calculation. All right, fees is about 2% of whatever value that you're getting. Now, as of June 20, the 17th of June 2022, JMB is selling at some $42.50, which now values our total investment in JMB at $111. All right. And if you look at the percentage return, JMB is returning from 11% as of June this year. All right. So JMB has underperformed based on what we were expecting, but we still believe that the stock has the potential to be one of the biggest performer in our portfolio. Now, JMB management has recently outlined some strategy that it wants to employ in order to boost the stock price. All right, and we have suggested a number of strategies that we believe management should employ so as to bring more value to shareholder in terms of capital gains. Now, we will be on the lookout to see how well management or how convinced management are or how serious management are in boosting the JMB stock price. All right, so even against the financial sector recommendation that JFP is not a buy, we at Blue Collar Finance went against the grain and we did purchase some JFP stock. All right, and we had about $60,000. No, we had about $100,000 in our portfolio at the time when JFP stock came out. All right, so we put that total $100,000 on the stock. We were able to get some, $40,000 in. All right, so we were able to get $40,000 in our portfolio. And that's about, what time was it, in May? I'm not sure when JFP came out. What, March? I guess it was in March that JFP came out. All right, what I should do is to let me just freeze this panel so we can do a better analysis. Yeah. Okay, so JFP came out in March. All right, and we were able to get $40,000 in the stock. The stock came out at $1. All right, so we had 40,000 shares of JFP stock. This is supposed to be shares and not dollar. All right, so as of June this year, June 17, last Friday, our $40,000 in JFP is now $60,000. All right, so JFP went from $40,000 to $60,000, and that's a small portion of our portfolio. All right, so we're seeing a 50% return on the JFP stock. So JFP is now a 50% return, and we will continue to hold this stock because we think this stock will deliver better returns in the future. All right, Dollar Finance is the latest IPO that we seek to take advantage of. All right, so at the time when Dollar came out, which was in this month, we had some $60,000 in the portfolio. We were only able to get $11,000 in on the Dollar deal. All right, so Dollar started trading Wednesday of last week. Stock came out at $1. Now the stock is at $2 $0.31. All right. So as a result, dollar went from $11,250. That's the value that it has in our portfolio to now $25,000. All right. So those are the 5 stocks that we have in the portfolio as of June 17. All right. And we're still left with cash balance of $48,750. All right. So within the week ahead, we will be looking for stocks to deploy this $48,000. And there are a couple of stocks that we are watching, but we want to purchase those stocks at the opportune time. All right. So we want to go into those stocks when we believe the price is right. So there are a couple of stocks that we really, really like. They are good companies, but to us, they are not selling at the price that we are comfortable or we are comfortable holding those stocks. All right. So we will still monitor the market to ensure that we get in at the correct price. All right, so this is the overview of our portfolio. All right, so this is the entire portfolio that you're looking at. As you can see, the balance of the portfolio as of October, the ending of October, that's when we started the portfolio, was $399,967,000. That's about $400,000. All right, we had a cash balance of $100,000. All right. Now, as of the end of June, or not the end of June, but as of the end of last week trading, all right, that's Friday, the portfolio balance has increased to $534,000. All right. We still have a cash balance of $48,000. But what I want you to look at is the stock value. All right. So this is the stock value, the value of the stocks that we currently have. We started out, and let me paint that in green. So look at the green cell. We started out with $300,000 in stock. All right, and as of June, we're now up $485,000. So the total value of our portfolio, the stock portfolio, is $485,000, and that is up from the $300,000 that we started out. And this is pre-fees. All right, so fees is about 2% of the value. Our stock portfolio for that period has increased from 62%. All right, so we're up 62% on our stock portfolio as we speak. However, if you look over here, and let me paint that in red, if you look over the red cell, we're up only 34%. All right. So even though our stock portfolio is up 62%, our total portfolio is up only 34%. So what is the issue? Why is the stock portfolio higher than our total value portfolio, or the value of our total portfolio? And this is explained by the cash drag. All right, so cash is having a drag on the portfolio. So there are a lot of cash. We started out holding some $100,000 in cash. That is a quarter of our portfolio as cash, waiting for some IPOs or to take advantage of IPOs. All right, and the IPOs, we're just able to deploy 40% of that cash in the JFP IPO, and we were able to deploy some $11,000 in the dollar IPO. So currently, cash is down to $48,000. So we're taking advantage of those IPOs as they come due, but because these IPOs are highly oversubscribed, we're not able to get in as much cash as we will want to. All right, so cash is still having a drag on our portfolio. All right, so as a result of the cash that we're having on the portfolio, our stock or total value of our portfolio has increased on the 34% versus the 62% increase that we're seeing on our stock portfolio. All right, so stock portfolio is performing excellent. So what we will need to do is to quickly deploy these cash and start putting these cash to work instead of having these cash sitting on the balance sheet or sitting in the portfolio, not turning in any value. All right, so let us go to the chart and see how the portfolio look on the chart. All right, so the blue line that you're looking at is the stock portfolio. And you can see how the stock portfolio has performed. All right, and in April, the portfolio really start taking a steeper increase. All right, in April. Now, what I want you to notice, the gray line is the total portfolio. All right, so the gray line represents both the stock portfolio and the cash that is in the stock portfolio. And as a result of that, the value is above the blue line, which represents only the stock portfolio. The orange line is the cash that we have on our balance. All right. So the orange line is a cash balance, and you can see as of February, there was a dip in the cash balance. So that's when we tend to deploy some of those cash in the newly issued IPO. All right. And as of May or June, the tip of the cash or the tip of the cash line, you can see another dip the other day when we get just a small, a bit amount of our cash in the dollar portfolio. Now, if you look at the difference between the gray line and the blue line, the difference between the gray line and the blue line, that's it, the gap between the two, that's the amount of cash that we hold in the portfolio. All right, now you can see the difference start to narrow. All right, that is because we are deploying more of the cash in, or we're putting more of the cash to work. All right, so instead of having the cash sitting on the balance sheet or sitting in the portfolio and not doing anything, we are started to put those cash to work. And as a result, there's a narrowing of the gap between our stock portfolio and the value of the total portfolio. All right, so as we speak, we're up some 34% in our total portfolio, as our stock portfolio is up some 62%. So what we want to do over the course of the trading week ahead of us is to narrow the gap between our total portfolio and our stock portfolio. And that will mean start to put more of our cash to work. All right, so we are planning on putting all of the cash to work. All right, so we are going to change strategy. Instead of keeping these cash on the balance sheet, not doing anything, and having these cash dragging down the return or the total return of the portfolio. What we will do is to start to put those cash to work, and as IPOs come along, we will want to rebalance the portfolio, sell off some of the stocks that we have, or take some of our gains and redeploy those gains into the IPO or any other stock that we believe will give us the future return that we're looking. All right, so this is a new strategy that we want to employ, and it entails deploying all of the cash that we have and getting new cash from rebalancing the portfolio instead of having the cash sitting on the portfolio, not doing anything. All right. So as you know, this is Blue Collar's finance portfolio, and we want to keep this as a weekly, or we want to do a weekly update of the portfolio. So you can look out for a weekly video of us updating the portfolio, telling you the strategies that we're employing, and what are the stocks that we have added to the portfolio during the week. All right, so you can look out for that coming. And one thing you must take into consideration is that we're not advising you to invest alongside this portfolio. All right, because there's a lot that much goes into the portfolio. All right, such as the risk profile of the person that owns the portfolio. And we believe that your risk profile is different from our risk profile. And that is the reason why we have not included a lot of those stocks that we saw as undervalued into this portfolio because it does not fit our risk profile. So we always advise you to talk to a licensed financial advisor before start investing, and they will have you invest in a way that matches your risk profile. So that is it. That is what we have for you for this week. And you can stay tuned. Next week, we will drop an updated video on the blue collar finance portfolio. And we will break down the strategy and the return of the week. So until next time, see you.